Hey, what is up, everyone? It's David here. Inflation is the main talk of town this year, and everyone is scrambling to look for assets that will help them not lose money down the track. The usual suspects in these conversations are stocks, real estate, or any form of scarce asset that will have enduring value.
But sneakers?
How the heck does someone build a sneaker fund that outperformed the S&P 500? So in this video, I spoke to Justin, the co-founder of Pushas, who did just that, and he gave me a masterclass on how to determine value for sneakers. As usual, this is not financial advice or recommendation to do anything, but if you do enjoy conversations like these, just gently smack that like button right there. In today's episode, we have Justin from Pushas, and we're going to talk all things about starting a business and also sneaker as an alternate asset class. And Justin also turns out to be a subscriber. So I don't want to butcher the introduction. And I'm really hoping that you could tell us a little bit more about your journey so far, Pushas, and then we'll talk about sneakers as an alternate asset class.
So thanks for having me, David. How I started was me and Sandy, my co-founder, and she's my partner as well. We've always been sneakerheads. So her more than me, actually. She's the one that introduced me into sneakers. She's always buying me sneakers for my birthday and occasions like that. And so I saw that sneakers were reselling like crazy, like back then with the OG Yeezys. That's when I kind of started to really get into it. But Sandy bought me my first pair of Ultra Boosts. And I had a feeling because that these sneakers were going to be hype. And, I saw that the Yeezys were doing well back then in Australia, especially. Like, not that many sneakers would resell for a high price. It was happening, but it was quite a slow process in terms of only certain, like, really hype pairs. Whereas nowadays, like, everything's hyped and everything's reselling like crazy. But back then, I saw that the Yeezys were doing well. And so I thought, these Ultra Boosts look amazing, right? And it was the first ever OG Ultra Boost release. And I thought, why wouldn't these go well? And they sat on shelves for a while, but months later they shot up in price. And I guess that's when I started getting hooked in the whole kind of speculation of sneaker prices. But there was another problem as well where I found that it was difficult to resell in Australia. The US platforms were starting to blow up, but it still seemed quite cumbersome, especially in Australia to resell. It was just hard in Australia because what you do is you have to send your stock to their authentication center, and then it gets sent back. And from there, like, all the shipping costs become pretty prohibitive.
Can we talk a little bit about authentication? Because it seems like there are a lot of fake sneakers around, and you have to make sure that it's almost like with gold bars storing in a vault, there's always someone that checks the validity.
Exactly.
So can you talk a little bit more about, or whatever you can share, when it comes to the authentication process for sneakers?
Yeah, so I think the authentication process is actually quite interesting. And when we first started, it was more, finding a real pair and then comparing it to that pair. But now we've been able to kind of build up processes, and we have a list of, like, a laundry list of things that we look at when we're authenticating a pair, depending on the brand of the sneaker silhouette, of course. But it comes down to, like, the materials, the stitching, the box, the logos, the glue, even the smell of the sneakers, because some sneakers come from, like, certain factories. So there's, like, a distinct smell that fake sneakers can't replicate. So I don't know if you know, but, like, when you open a new box of sneakers, that smell, right? And there's all these other things that you look for that we kind of now have a database, like, for each sneaker. Like, so if it's like a Yeezy 350, there's certain things that you look for. If it's like a Jordan 1, there's certain things that you look for. If it's a Jordan 4, there's certain things that you look for. And that's kind of how you authenticate the sneakers. Like, I'm good at it now, but I'm also not the best. Like, Sandy, she's probably the best in Australia, like, in terms of being a sneaker authenticator, because she's authenticated like hundreds of sneakers a day for the past 4 years. She can touch and feel a certain sneaker, and she can be blindfolded, and I'm sure she can tell if it's, like, authentic or not.
That's a sneaker whisperer.
Yeah, exactly. It's pretty insane. That's authentication. But I guess, like, how we started is I did summer school exchange at UC Berkeley back in 2017. I got to travel a bit, like, around California and the West Coast, and so I visited stores like Round 2, Flight Club, like, and back then, like, those were the great sneaker stores, the mecca of, like, worldwide sneaker reselling, right? And we didn't really have that much stuff like that here in Australia, and so I loved it, and I like, honestly, like, I started thinking, why don't we just set up an online consignment store in Australia? Like, I didn't have really great ambitions for it or anything like that. It was just more, I was still at university, so I was just doing on the side and thinking, like, let's just run a small business, right? And so we hustled, and by the time I graduated law school, it was a decent business there, and I just decided to go all in rather than take, like, a grad role somewhere. And yeah, here we are.
before we talk about financial independence, I just think this is such a good time to talk about this because the whole idea of sneakers as an alternate asset class is the story and the cultural relevance to that to
Yeah.
that pair. So maybe you can talk a little bit more about your thesis behind how sneakers can have enduring value that could become an alternate asset.
Yeah. So I think when it comes to sneakers having enduring value, like my belief actually is that value is anything that you've described value to, right? So like sneakers is no different to that. Like if you think about it, like gold and Bitcoin is only valuable because collectively we've all accepted that it is, right?
It's a
Like
story we're telling ourselves.
exactly, it's a narrative. There's really no underlying value, unlike a bond with like a coupon rate or like a dividend paying company, right? Where you know that with an investment in X is going to pay you Y percentage back and in Z amount of time. Like that's what you learn in business school, right? And that's when you make your investment back. So that to me is like inherent value. But like you look at even like most growth companies now, right? That like that's no longer the case. If you're like an Uber or an Amazon, like you're never going to pay a dividend. And so like investors are buying the stock, like betting, and it's a collective belief that the stock will be worth more in the future,
Yeah.
right? Like,
Yeah.
and to me, I think sneakers exist on the same spectrum. Like obviously not to that extreme, but it's kind of similar to like gold and Bitcoin. And so I think because we live in a society now that says that sneakers, there's an inherent value in sneakers because of the history of sneakers, because of the story of sneakers being so kind of embedded in mainstream culture. It's now kind of been elevated up into like this thing that will kind of never go away. And I think that the dynamics that affect the value of sneakers, like as well, right? So like the supply of sneakers are always decreasing, right? Because for example, like brands release like an X amount. So you would know brands might release like 10,000 pairs. People buy it, and like over time, more and more people wear their pairs, and so the number of new pairs on the market decreases over time. So that naturally drives up prices because lower supply equals increased demand, right? And then there's also like the value behind the brand, I guess the stories behind the sneakers as well, the emotional connection to them, and like that will continue to grow over time. So I think alternate like assets generally will always be worth something like if it's like to a collective group of people, if we ascribe value to it, then it's always going to have enduring value no matter what it is. So like I look at I look at people again, like I look at people like, well, how do you have value in sneakers? Like aren't you just speculating? I'm like, well, you're invested in like Uber or Amazon. Like, isn't that just speculating that the value is going to go up? That someone else is going to pay more for your share down the line because they're not making any dividends. So it's like, can you really kind of ascribe that? So that's kind of how I see it, right?
I want to explore that a little bit more because recently I watched an interview between you and I think a good friend of yours called Tommy on the idea of sneakers being released on a tier 0, 1, 2, 3 level where the tier 0 is almost like the hype brand, very limited, and then the rest is like mass market manufactured. So then the top brand kind of builds the brand for the rest of the tiers. So maybe talk a little bit more about that and how that kind of how that contributes to the sneaker value over time.
Yeah, so I guess it depends on kind of what sneakers we're talking about. And like I said, I think it's a story, right? It's a narrative behind the sneakers. So for example, I'm not sure how familiar people are with sneakers, but there's different tiers, just like how I always use the example of say Mercedes, for example. They have their top line, their top like Mercedes GT car, and then it goes down to like the entry level Mercedes car, right? The same thing, the same dynamics happen within sneakers. So the top sneaker, the top releases or the top, I guess, tier of sneakers are usually the ones that are really hyped. They're usually collaborations. They're usually like very limited run. In Australia there might be only 10,000 pairs. There's other like there's different characteristics to that, and that really drives the value of the rest of the kind of catalog, right? So if you're Nike, for example, you might have your Jordan ones, and they're usually because Jordan ones were the first kind of hype sneaker ever. They when you only release a couple of those a year, then people are going to buy your Jordan 5s, which are maybe a bit less hype, but it's still mid-market. But then people who can't buy Jordans, who can't afford a $200, $300 pair, they're going to still buy into the Nike brand, right? And there's a lot of kind of mass market GR sneakers that come out, which are sitting on shelves at Foot Locker, sitting on shelves at Nike. But people are going to buy into that because that's kind of their entry gateway into the brand before they start to elevate up into the certain sneaker tiers.
Yeah, I think that's super interesting when you talk about tiers. and how previously in the conversation you talked about how that could be a factor to drive value in the future. And I remember in that interview, you also talked a lot about how like it's almost like looking at the sneakers can also be almost very similar to fundamental research, where does a sneaker have celebrity endorsements? You know, what is the story behind the sneaker art? Maybe talk more about like the factors that kind of creates that value. Like, why will someone pay 16 G's for a sneaker? What is the
Yeah.
most expensive one you've seen so far that have kind of like skyrocketed in value?
Yes, I think on our platform we have a couple that's kind of skyrocketed, but I'd say the most expensive I've seen so far, man, they're the M&Ms, the M&M collaboration, like Eminem the rapper, not Eminem the candy. So some people might get mixed up, so I just have to clarify. But yeah, they're going for an insane amount, like insane. Last time I checked, it would have been like 60 grand USD for a pair, and it's insane, right? And for me, like how I think you can determine the value of the sneakers is, well, actually, I'll break it down. So I think there's my approach, and I think there's like the general mass market approach, right? And just to, I guess, clarify too, like my process isn't representative of everyone else's. So I guess it's just my way of looking at it. So my main tool that I use is basically looking at like the Pushas platform, right? Because the Pushas platform, the great thing with the platform is that I get tens of thousands of data points a day about sneakers, and so I can really make kind of data informed decisions on the price action of the sneakers, on the volume action, on the liquidity of certain sneakers and other indicators that are there. And to me, like that, like I don't base a lot of my valuation based on just that, but it does drive a lot of my valuation of the sneakers. And going back to kind of like securities picking, like some people have a more of like a value kind of way of looking at securities, and some people look at growth, right? I kind of, if I had to kind of put a name on it, it's sneakers, I'd say I'm a bit of both. Like I try to have like a price that I think it should be worth, and then obviously like a price target of what I want to sell to, and then obviously like a buying price that I think generally I think it's worth, right? And then there's other factors that kind of play into that. So I look at a lot of the qualitative factors. So again, we go back to the narrative, right? Who's the collaborator, right? So you look at someone like Eminem, who's like one of the best, at least seen in popular culture, is one of the most, the best rappers alive right now. Any collaboration that he does, especially now that he's in that like that GOAT tier, like they're gonna do well, right? Anything that Kanye touches is gonna do well, right? Anything that now like one of the hottest stars now is Travis Scott. Anything that Travis Scott does is gonna do well, right? And so you look at the narrative behind the pair, like who's worked on it, even the design of the pair. So for example, like Kanye used to work with John Wexler, who was the man who really built the Yeezy brand internally inside Adidas. John Wexler works on something now. I think he's working elsewhere now. I think at Shopify, from what I last heard. But if he's designing a sneaker, that's going to do well, right? And then there's pattern recognition of similar sneakers as well. So you start to see certain sneakers of certain colorways, certain silhouettes, they start to do well. And so I ascribe a value based on that. So, and then there's a weighting based on that as well. So I have this like this kind of internal formula that I use with a lot of these factors, and I weight each one based on what I think obviously is good, and then I kind of discount it, right? Then I have a buying price that I tend to offer resellers for to buy, and then I have a target sell price that I'm like, okay, if it goes to this price, I don't think it's going to go that much higher, so I'm going to sell that price, and that's when I make my return. That's my process of how I value the sneakers, if that makes sense.
Wow, you have such information asymmetry compared to every single other. Well,
exactly.
Yeah,
that's my edge, right? Like the fact, like, and that's my edge, and that's why I think it does well, is because like I have the platform, but I also am like kind of engrossed in this. Like you have to be doing this full time to kind of get it. Like if you just miss out a week on the drop, you just don't know what's happening, then it's just not that. You need to kind of really be doing this full time as well as having the platform. So I think like that's why I'm kind of not scared of putting my process out there, because someone has to then have built 4 years of the platform to kind of get all the data and get that first, and then to be able to kind of build it out, right? So, and and well, I don't know if I should be mentioning it, but we're working on the cards to kind of build out like a machine learning algorithm to kind of get what my kind of my process, and hoping that an algorithm can see if they can value sneakers better than I can, right? And so we'll get to a point where we'll probably be one of the best in the world of knowing not only the current price. I think the current price, you can look at StockX, you can look at any other platform, you can know the current price, but what the price movement will be, right? That's, to me, is actually where it gets interesting. And even predicting the price before a drop, that to me is where I like playing.
Well, actually, one of the questions I wanted to ask you, but I didn't put it down in some of my notes, is that like, are you building tech around this to automate some of the process to evaluate each of the factors within the business? Because it seems like a natural step
Yeah,
next to.
exactly. So that's the natural step, and that's kind of what we're working towards. And we're building out the team to kind of do that. But that to me is where it gets interesting, because then like this is my wheelhouse. I want to be the person that, and the team, like I want Pushas to be the brand where we're known as the kind of the mecca of alternate assets. Like that's kind of where we want to be.
And to build on that a little bit more, it seems like there's so much success that you attracted some VCs and hedge fund guys to build a fund. You build a fund on this.
Yes.
Maybe you can talk a little bit more about that journey of building a fund around sneakers as an alternate asset, and what are some of the rebuttals that people have essentially said when you started to think more about sneakers and building a sneaker fund?
Yeah. So, well, it's interesting because I actually think we didn't really get too many rebuttals. Like I think the investors that we took on for the sneaker fund early on, they all understood the vision. Like they were all either maybe not sneakerheads themselves, but they understood alternate assets, whether they were into watches or cars or wine. So they kind of understood the value already. So I think that first hurdle wasn't hard. And, to be honest with you, like I initially was looking just to raise for a small amount, but then, I put up a tweet and I was just like, hey, like I'm looking to raise a sneaker fund, like who's interested? And within like 24 hours, we were oversubscribed. We were double what I initially asked for. So it was pretty insane. And then, I took that, I deployed it, and within a couple of months, like the results spoke for themselves. And so, I then raised another round for the existing investors, and most of them, exercised their pro ratas. So it was quite crazy. And I think the thing that most people ask when they say, oh, you're doing a sneaker fund, they're like, well, how do you value them? Which I've already kind of explained. But also, like, again, like you've asked the question, like why is there value in sneakers, and why are people willing to pay that much? And I think, I think it's quite self-explanatory in the sense that like anything you ascribe value to, it's gonna have value. But I think now we're getting to a stage where it's like, okay, well, like, can we scale this up? And when we do scale it up, like where to from here, right? I think the returns are there, and I think it's I found that the great thing is that it's the returns were quite the returns were great, but the great thing is it's quite risk adjusted in a sense that because we have such a large portfolio of sneakers, it's not like if one sneaker tanks, it's not going to tank the whole portfolio. That's the great thing. So we're quite diversified. And the second thing is that, it's uncorrelated to like the normal markets, right? That's the other thing that I think is interesting about this, is because, just because, the thing is, I look at, like, for example, you would know the best, but like you look at something like crypto, and usually when it acts inversely to the market, in a sense, like when public markets are down, crypto's up because everyone's like, oh, let's get all our money into crypto and hedge against inflation, right? But with sneakers, it's been quite smooth, and it's been quite uncorrelated. So those are the two things that I really like about sneakers.
The thing that we talk a lot about, especially with different asset classes, is that there are cycles. There tends to be cycles. Will there be a similar thing when it comes to the cycle of the sneaker as an asset class, or is the cycles more attributed to that particular sneaker that kind of goes through up and down?
I think it's a bit of both. I think it's nuanced, and I think it's a bit of both. So sometimes certain brands become more popular, and then other brands become less popular over time. So there's a lot of that. The sneakers themselves also play a role. So some sneakers, for example, like it really depends on like the story of the sneaker. So say, let's say if Kanye announced tomorrow he's never doing sneakers again, they're going to shoot up, right? Or LeBron like retires, right? That's obviously going to make sneakers shoot up. So I think it is like individually, depending on the sneaker, it's going to fluctuate, but also as a trend, it's like a certain class of sneakers might become popular, and another class of sneakers might become less popular, and that's what's going to drive prices. And it's a cycle. Like I've been in this for 4 years in the business, but even longer, kind of watching the market, and you see certain brands come in and out of popularity all the time. And so it's just understanding, again, like I do have a portfolio strategy for my sneakers, and I don't allocate too much into certain brands and too much into to certain silhouettes. So there is a kind of portfolio strategy there, and it's just knowing how to kind of it's the same as constructing a stock portfolio, right? It's the same thing. So that's how I look at it as well.
What is a rising brand that you've seen that kind of came out of nowhere and have started to attract a lot more mainstream attention? Because the main ones we know is, we have Adidas, Nike. You can also argue that New Balance is kind of on the rise. So is there a brand that you're seeing that's kind of like it's suddenly attracting a lot of attention, and it's not what it was unexpected on your end?
Yeah, so I think you're right. I think Essex and New Balance are starting to rise, but for me, it's usually a lot of the brands under the big brands. So for example, with Nike, you might have like Air Forces, or you might have Air Maxes, or you might have certain things. And I think certain silhouettes become popular out of nowhere, and you just really can't predict that. But it's more kind of understanding the price action. You start to see it trickle in, and then it starts to blow up, right? So it's kind of moving in early and understanding the movements and the trends before they kind of happen. And I think the issue is as well with sneakers is that the narrative and the story and the history is so important, right? That I actually find it difficult that a brand new, completely out of nowhere brand is going to do well without it having the backing of an existing brand already. So like an example is Yeezy. Like the reason why Yeezy does well is because it's Kanye backing it. Like if it was just a random brand and it didn't partner with Adidas, I don't know if it could have been that strong. And the same with Jordan, right? Like the reason why the Jordan brand was so good was because it's, by Michael Jordan, but it's also backed by the infrastructure of Nike. I think the history is so important, and all these brands have such a rich history behind them that it's usually just the top like 4 or 5 brands in sneakers that you see out on the shops. They're the ones that are always going to be competing for first and second spot.
That's a great place to wrap out our conversation. If people were to find you, find Pushas, where can they find you?
Find Pushas on pushas.com, pushas.com. Our Instagram's pretty big now. Our Facebook page is pretty big now, or on the Pushas official. So find us there. But if you want more of, I guess, my thoughts and my therapy sessions, find me on Twitter.
Thank you for coming on the channel today, Justin. I appreciate it.
No, it was my pleasure. I'm a big fan. So thanks for having me.
So thank you for watching this video all the way to the end. If you want to support the channel, not to mention access to additional content pieces and be part of my fortnightly Q&A, consider supporting the channel via Patreon. Nevertheless, if you have learned something new, remember to gently smack the like button right there, subscribe to my channel so that when I release future videos, you be the first one to know. Until next time, my name is David. Otto will always do the honors, and see you very, very soon.